I'm going to have to ask you about the banking crisis, though. And just tell us from a banker's point of view, what do policymakers need to do to get this contained?
Yeah, I think it starts with, what do you define as a crisis? I think we're seeing this play out at multiple levels. Of course, there was the crisis that came about 90 days ago or 60 days ago, if we want to call it that was driven by liquidity and ultimately a crisis of confidence. I mean, capital cannot replace confidence. And so I think what the market needs in order to move forward is the confidence that the banks are in a position to weather the economy, whatever rates do, whatever, if we have a soft landing or a hard landing, everyone is looking for confidence.
Mm-hmm. And so that said, one of the only ways people are now saying we can instill confidence is to raise FDIC insurance. Let me just quote Morgan Ricks. He's at Vanderbilt. He says, look at what happened with First Republic. The big banks got what they want. They avoided having the cost of failure imposed on them through the FDIC. The FDIC gets what it wants. Depositors were made whole in this case. The losers, he says, ultimately are the rest of the banks, the non-giant banks and their customers. Do you agree with that what everyone's saying right now, that this all benefits the big getting bigger?
Oh, I don't know that everything benefits the big getting bigger. Of course, that's part of it. And that makes for great headlines when you look at the way the deal was structured with FRC upon its failure. But what I would say is you have obviously the market does not believe the tangible book value calculations of many of the large regional banks, or they wouldn't be trading where they are. The market has also decided that there are banks well below that, like Triumph Financial, who have a business model that will thrive in whatever new regulatory environment, whatever rate environment is coming our way. And so I think there's always opportunity, whether you're one of the largest banks or one of the smallest banks, as long as you understand the markets you're in and understand the markets you serve.
Right. And kind of by implication there, maybe there were some bankers who did not do that or just simply did not manage risk that well. I mean, I mentioned commercial real estate. Correct me if I'm wrong, 4 years ago, you guys thought the returns were unattractive, so you didn't originate a lot of loans in 21 and 22, and those valuations were highest. Do you think, in other words, that the banks that are weakest right now, from your point of view, ought to let the market do what it's going to do with them?
Yeah, I think this is capitalism, and the market is going to sort this out. And anything we try to do to kick the can down the road, I'm not sure is valuable for anyone. To your point, commercial real estate is a place historically where community banks have been able to grow. It's just by the way the market works, and it's a great opportunity. But when the market starts pricing in perfection, when the market starts pricing in a perpetual zero interest rate environment, that commodity class becomes at risk because it generally adds duration risk to your balance sheet. And so it wasn't fun for us for the last 3 or 4 years to lay out of that market. But at the end of the day, you have to decide, is it about optimizing for the near term, or are we going to run this bank so that even if we're wrong about our own view, that we're in a position to weather that storm? And having been part of turning around a troubled bank, the second answer is always the right answer. You have to be prepared for what you don't predict.
So then let me leave it on this. What are you going to be doing in the next 6 or 12 months, especially if the storm gets a lot worse? How do you navigate a bank through a period like that? Just kind of give us a sense of what that means and what are those decision points? What does that look like? Especially, I mean, you guys have a very low cost, if I'm not mistaken, deposit base. Is that going up?
Oh, sure, it's going to go up. Hopefully it goes up slower than our peer group. But to your question, if you're making decisions now, you're probably too late on many of those decisions. The biggest part of weathering this storm, those were decisions made 2 or 3 years ago. For Triumph, what we do now is we continue to focus on what we do well. We bank Main Street in the markets we serve, and we bank truckers. And that's what we know. That's what we built this institution to do. And we need to be able to serve both of those markets, whatever comes. And so that's what we will continue to do.
Yeah, if you're making decisions now, you're making them too late. I think that that resonates today. Aaron, thanks for joining us. Thank you so much for your time.